So let's keep on with it here with Nvidia this morning. As the company has tripled in value in about a year, is this growth sustainable as investors continue to reward the AI hype? Here with more, we've got Doug Clinton, Deepwater Asset Management Managing Partner here. All right, so let's start there. Is it sustainable?
I think it is sustainable. And, it always sounds smart to ask the question, when will this be over? You look at the hockey stick that you just described, Brad, it feels a little scary. It looks a little scary on the chart. But I think the reality is this: we are in inning 3 or 4 of this AI bull market. I think that we are still early, as uncomfortable as that sounds and maybe feels. But I think it's going to feel uncomfortable all the way until we get to eventually being in a true AI bubble, which we think is kind of the culmination of this bull market. And then people will stop talking about valuation altogether. So that's the odd sort of counterintuitive reality is we're worried right now that things might be over. It's probably not over. When we stop worrying, that's when you should start worrying.
And also, Doug, just taking a step back, we also have the stock split that's going to take place or be effective after the end of the trading day tomorrow. I guess when we just talk about some of that near-term excitement, that buildup that we've seen within AI, how big of a driver do you see that? It's probably just going to be a very brief blip here, or a move bump to the upside, but how big of a driver do you see that in terms of just the narrative and excitement surrounding AI?
I think the stock split for Nvidia, as you said, Sean, I think that will just be kind of a blip here. Obviously, that gets certain people excited. Mentally, you see a lower stock price and people feel like it may be cheaper, even though it's not. I think the reality, though, with Nvidia is they continue to show business momentum. I think that's really what is the most exciting piece of the entire story, is that despite all of us worrying that eventually this demand for chips will slow down, we haven't really seen that slowdown happen yet, and it may take longer to slow down than we think. That's kind of the new opinion that I think the street might think about.
And so as we're thinking about what the street is going to continue to rally on the back of here, I mean, we just laid out the entirety of the companies that are really within this $3 trillion conversation. And for Nvidia, it's really been the artificial intelligence demand that they continue to cite and how people are essentially looking at them as this de facto AI play. What about the market share that they need to retain in order to continue to maintain this type of sentiment in the street?
I think that's the right question going forward. I mean, right now, from a market share perspective, they likely have 80 to 90% of accelerated compute market share for chips that do power this AI revolution. And I think going forward, they probably need to maintain share in that realm. So the question really is, number one, can AI companies that are building these models like Google, like OpenAI with their partnership with Microsoft, can they eventually generate revenue that makes this investment justified? That's an outstanding question. I think they will. It may take longer than investors hope, but I think they will. The second question, to your point, is can Nvidia maintain its dominant position providing the brains to these artificial intelligence models? And I think they can for the next 3 to 5 years. I do think that we should pay attention to all of the hyperscalers building their own silicon. There is going to be competition out there, but I still think at least for the next 3 years, Nvidia is going to be the go-to company.
Doug, I was just out at Bank of America's Global Tech Conference earlier this week in San Francisco, and I was talking to some executives. The Nutanix CEO, Rajiv Ramaswamy, was one of them. I was also speaking with the founder of Pure Storage, and they've raised that issue that you were just bringing up, right? Just in terms of how realistic maybe these timelines are until we see some real return when it comes to some of those secondary players. I'm curious if you think that the market almost needs a reality check at this point, and maybe the excitement in some of these plays, maybe not Nvidia, and certainly doesn't seem like Nvidia, but when we talk about some of those secondary plays, has it gotten a little ahead of itself at this point?
I think it depends on your timeline. And when you look at sort of these technologically driven booms, they're never purely up and to the right. When you zoom out, they always look like they are. But when you live through it day to day and week to week, there are pullbacks. I mean, even Nvidia had a 20% pullback earlier this year. That's painful if you bought the stock at the top. And so I wouldn't be surprised if we do see some of those right sizings, temporary right sizings, in the next 3-6 months, as investors do think about how do revenues ultimately translate. And I think the story with emerging technology is often the same, which is it usually does take a little bit longer than everybody hopes to generate meaningful revenue. But once that revenue comes, it's often bigger than people even imagine. I think that's probably going to be the case for AI too.
Just while we have you here, NVIDIA CEO Jensen Huang talked about demand for the company's chips in an exclusive interview with Yahoo Finance. This came after the company's first quarter results last month. I want to play for you a clip of what he had to say.
Copper demand grew throughout this quarter after we announced Blackwell. And so that kind of tells you how much demand there is out there. People want to deploy these data centers right now. They want to put our GPUs to work right now and start making money and start saving money. And so that demand is just so strong.
Do you have an assessment of, within these data centers, the makeup or the total number of chips that we could even potentially see some of these data centers grow out to, as we're looking for even more demand that is going to be needed? Well, not needed, but even more that is going to be asked of the chips within the data centers because of generative AI.
It's a big number, and the reality is you can look at several data points. I mean, XAI, for example, a company that Deepwater actually just invested in recently, Elon Musk has talked about needing 100,000 of NVIDIA's top-end AI accelerator chips to build the supercomputer that they want to build. That's $3 to $4 billion of CapEx there from a single customer. And obviously, that's just one data center. That's one supercomputer. They will continue to build more infrastructure over time. And I think you can look at the same thing for many of the other hyperscalers. We're talking about hundreds of thousands of chips that are needed there. And maybe even if you expand out, you look at sovereign nations that are looking at AI, you look at industry that are thinking about how to apply AI, the demand for the chips could scale into the millions.